Good morning, Jay. It's nice to reconnect with you today.
Good seeing you again, Go Bear. How are you doing today? Happy Friday to you.
Yeah, happy Friday. And this week is a shortened week with only 4 days trading, and it is a triple witch day. That means a lot of options is gonna get exercised or expire today. So as we see that it seems the Nvidia rally has been paused with -3% so far. Jay, I read your article about recent stock market analysis. Do you think Nvidia's rally is paused and now the trend is reversal, and so adding in XLK has already been priced in for Nvidia stock?
So there's a few things going on today, Go Bear, just to kind of address your question. Goldman Sachs reported that $5.1 trillion in options were expiring today. This is a new record for the markets. The buyer was around 4.6 trillion back in December of 2023. Usually at the end of the year, you get the highest levels in December because you also get some of the annual options that are expiring there. But it goes to show the popularity of options over the last couple of years and how it's grown. So, I mean, with that, there comes a lot of volatility potential in the markets that if you're trading on options expiration, unless you're an options trader, you should always try to trade in a little bit lighter size just because of some of the activity going in with the market makers that you might not be aware of. You could easily get run over by some of the bigger players, especially, again, think of that 5.1 trillion in notional dollars that are expiring today. That's a lot of money that's moving around. So that now with that, about 780 billion of that was single stock option futures, a lot of it in Nvidia and a lot of it in Apple. We wrote an article a couple of weeks ago on the A Invest site talking about the amount of money that was going in there. So the other item of interest for Nvidia and Apple in particular is today is the rebalancing for a lot of ETFs. One of them being the spider ETF, the XLK, which is seeing a bit of a switch. So the XLK's rule where the top 5 stocks on a weighting basis can't be over 50%. These are any stocks that are 4.5%. So what it generally do is 2 stocks will dominate the XLK. It had recently been Apple and Microsoft. They were a combined weighting of about 43%. Now, Nvidia and Broadcom had both risen to over 4.5%, that 4.5% threshold we were just talking, thus creating those 4 stocks alone being over 50% of the index. So what is happening right now is because Nvidia has surpassed both Microsoft and both Apple, they're changing the weighting in that index. And that means Nvidia and Microsoft will both be about 43% of the index, where Apple will drop to about 6%. That leaves 3 stocks, making it 49%. Broadcom will drop below that 4.5% threshold, as we were just talking. So what you add under the surface, in addition to these options trading, is about 11 billion in fund managers' hands, really switching from Apple into Nvidia in order to take care of the in order to that new rebalancing. Now we are going into Friday. Today is the official rebalancing for it, and what that points to is that a lot of this price action at this juncture has been priced in. Now you saw some activity going in Nvidia yesterday into the close, right? That had that big pop at the start and then it rolled over. A lot of that was some of the jostling in between the rebalancing and the options expiration in front of that event. It brought Nvidia back down to that 125 level. It's now trying to find a little bit of support there. Apple, for its part, has slipped back down to 210 area.
Yeah.
Now, a lot of this money movement and activity should have passed at this juncture. So Personally, what I'm looking at is I do think that we could see Apple slide just a little bit more, perhaps back down to the 200 level, which sets up perfectly for the 20-day moving average, and also the trend line support that's in play here. This would be trend lines that we're looking at going back to April or to mid-April. I think this sets up as a nice buying opportunity for those who might have missed that breakout in Apple. So I think that you can't afford to nibble a little bit on Apple here and look for it to push higher. Nvidia, in the meantime, I do think that we're starting to get a little bit closer to the Nvidia earnings report. Just taking a look at that date.
I saw, is it the next Wednesday, Nvidia earnings?
Yeah, so look for people to file into Nvidia in front of, well, I got Nvidia coming up in mid-August, right? Micron's going to be next week, I believe.
Oh, micro next week.
But yeah, so I see people coming in to buy that dip too. I guess the thing that I point out is that the what should I say? The most of the action is past at this point, and we should be able to see a little bit of that volatility die down, and for people to come in and buy this little dip in the stocks. So we'll keep an eye out on those plays moving forward. But that's some of the price action that has been going on in the backdrop that should be quieting down here.
Yeah, volatility is also a lot of all options is going on, and it's very volatile these days.
Yeah, again, options expiration is now behind us, so we should be able to move forward with this. But that's kind of the activity that's been going in under the surface. The rebalancing has taken place, and I really think it opens up a nice buying opportunity for Apple. I've been buying a little bit here and averaging down to the level if we continue to see that drop.
Yeah, Apple stock. After I bought it, after I read your article, I bought it around the 190 something. I sold it at 200. Yeah, I feel like I want to buy if there's any weakness in Apple.
Yeah, Apple's set up nicely here. So the valuation's still fair for it. It's getting a little bit of a late pickup going into the AI cycle, but I've been hearing some pretty positive commentary around you're hearing some positive around it, and especially the iPhone sales go China, and should be fine, I would say. Obviously risks with any names, especially if you see the jobs numbers creeping up and people start getting concerned about that. But a lot of good momentum behind Apple, and a lot of strong volume on this uptrend that suggests to me that you should be buying dips in Apple.
Yeah, on Tuesday I went to Seeking Alpha Investing Summit, and there's a panel that Dan Ives is there. He said that Wedbush Securities, they are target $4 trillion market cap for Apple next year. So like in 1 year, in 2025, I think Apple will go to 4 trillion.
Yeah, I mean the numbers are crazy around, but I mean, this points to that's been pumped into the system over the last few years from central banks.
Got it. And so Jay, in your opinion, as now this week we seem saw better economic data, do you feel like Fed will cut interest rates somehow this year? And so for now, the T-bill and chill strategy seems works really well with 5% on invested cash. So this strategy lasts Fed cuts this year.
Yeah, I mean, I like having a portion of your portfolio in that. Given, I wrote another article about the breadth in that's out there, and there are some about that. Now, we did see some positive signs yesterday about an improvement there, some money flowing into the financials and into the into the energy patch. This is going on around options expiration, so you always want to be a little careful about reading too much into that price action. You'd like to see a little bit more of a trend. That's really going to be the big story for equities moving forward. Now, the next big thing going on for the markets is certainly going to be that Q2 earnings and how we see stocks perform, how those companies perform. There's definitely been some growth concerns been associated with this dip going on in the in treasuries. Now, also stemming from Europe and the snap elections being called in France, which has led to some safe haven buying in U.S. treasuries. So that's kind of weakened the yield a little bit. Given the breadth issues, I do think that it's wise to have a good percentage of your money parked away in a T-bill. I mean, if you could get 5% for a 3-month T-bill and kind of sit out Q2 earnings season, let's see how it unfolds, especially given the rich valuations of a lot of the market and top stocks and that tend to be the best performers, then that is a very viable option that I would suggest people have at least a portfolio stocked away in bonds and collecting that safer return. You could even find savings PYs over 5%. That's still very liquid money. Get your hands on and get a steady return. So I don't think that thing, it's not a TINA market where back in the day there were alternatives, right? You do have alternatives now, and I think that having a diversified portfolio makes a lot more sense.
Yeah, this strategy may be more defense side, as the market is already almost touched 5,500 as we discussed last week, and maybe some investors want to protect their gains and switch to a safer bet, which is the treasury side.
Right. A lot's going to, again, ride on Q2 earnings. But once we get through Q2 earnings, then we're looking at August. And, we're 3 months away from this point. It could lead to a little bit more choppier conditions. And plus, you got the seasonality of the weakness from going in towards late August into the November time frame, when you got a lot of the money market funds that are doing their tax loss selling going in. Again, I highly read that breadth article that Gobert has up, just to get an idea where there is a lot of under the broader market here. So that could be something that functions and works its way into that market fund tax loss selling season, which goes in through the end of October, right into those elections. So we also have the buyback for companies. They're in a blackout here, so that takes a significant buyer out of the market as well. So there's a few things that could point to a little bit more sideways chop. Again, Q2 earnings will be a big factor. Expectations have been lowered greatly, so you could see a little bit of a pop going on there if we do get those better than feared numbers. But I think if you do see a little bit of a rally on better than feared numbers in Q2, around Q2 earnings, that towards the end of August, you'll see that seasonal profit taking going on, and could lead to a little bit of a weaker period in September and October.
So Jay, for your most recent article, I saw you put a chart that it seems that they have the bad breadth of the market, that only a small amount of stocks like Magnificent Seven perform very well, but there's also the percentage of Nasdaq stock trading above 50-day MA is only 30%. So it's the divergence is bigger nowadays.
It's notable. So what basically we're at is, can these stocks that have been driving the market hold their recent gains while the other names start to catch up? Some FOMO trading where people chase this rally, but they're looking for names on. They start taking a closer look at those other than just all piling into Nvidia and Apple. Or do we see the market generals give up some of the recent gains and drag back down with the broader market? That's really going to be the key story over the next few weeks.
Yeah, so probably there will be a sector rotation, right? The capital flow from the high performance tech stocks to those like consumer cyclical and other small cap stocks.
Well, that would be the bull case scenario. But again, a lot of this is going to depend on the econ data that we get. Certainly, there's been some signs of potential cracks for growth. The jobs numbers have been a little bit weaker. So These are all factors that people are going to have to take into consideration.
Got it. So the last question, Jay, is do you have some like undervalued stocks in mind and recommendations as now and hold it for the long term, like when the Fed start to cut rates, the stock will begin to boom?
Yeah, there's one name that I a couple of weeks ago here that I do like is this New Scale Power Corporation, SMR. It's a nice little play on the AI space where it's a small nuclear power that one of the key things looking at for markets or for AI and energy that's just creeping higher.
Yeah.
And they're going to be looking for meet that. Solar and wind are definitely popular, but they just simply don't have the power to meet that. So you can see we've provided a list of these small nuclear reactor companies that are in play, and New Scale Power was one. I mean, the chart looks really nice in an upward trend on some good volumes since the beginning of March. It's break out above the 10 psychological number. So that's a name that I would definitely have on the radar for a play out there for people. In terms of some of the names that have been getting beat down here, Intel's one that I would eye out on. It's been trying to fight and hold that 30 level. Now they've been shooting themselves in their foot left and right here, trying to play catch up with some of the other names. But if people are trying to play a little catch up, this is the type of name that could see some buying interest as people feel that it could. If you can't throw it on a weekly chart there, go bear. This could be a name that I try to play a little bit of catch up on now, with the caveat it's gotten beaten down for a reason. They've been underperforming a great amount, but you can see it's held the level pretty well there, and it's trying to pump back off that number. Like about a play like this is your risk reward is well situated, where anything that breaks below 29, you don't have anything to do with the stock. So right now it's trading at 30.97. So you could risk 2 points here on a swing. And if it does hit, a good rally up to that 38 makes a lot of sense, whereas you're only risking 2 points to get that. So it's a nice risk reward there.
Yes.
Yeah, that shows you the bottoming pattern on right now.
Yeah.
Again, you would like to see some of the operations improve there, but this is a name that I would just throw on the radar to keep an eye out on.
Yeah. Multiple bottom looks
Multiple bottoms. There's heavy selling on downturn for sure, but that also could point to a little bit of seller's exhaustion, perhaps. So that's another name that I'd be eye out on here.
Yes. Okay, great. Jay, I think we have a great time talking to you and learn a lot about the recent market trend today. Thank you so much for sharing, and we look forward to talk to you next time.
We'll talk to you next week, Go Bear. Thank you for the time.
Yeah, thank you.